Imagine owning rental properties inside your retirement account and never paying taxes on the rent or the profits when you sell. It sounds impossible, right? Well, it's not only possible, it's completely legal, incredibly powerful, and it's called a self-directed real estate IRA. In this episode, I'll give you the ultimate guide to using a self-directed IRA to invest in real estate. You'll learn exactly how it works, the rules you must follow, a step-by-step process for buying your first property, and real-life examples of investors making tax-free passive income for life. The first question is, what is a self-directed IRA? Most people think of an IRA as a place to put stocks, bonds, or mutual funds. A self-directed IRA works the same way for taxes, but lets you invest in a much wider range of assets like rental properties, land, multifamily apartments, private lending, even tax liens. Your IRA, not you personally, owns the property. The title might read something like Equity Trust Company FBO, Jane Smith IRA. Another question that comes up is, why investing in real estate through an IRA? First, the tax advantages. A traditional self-directed IRA lets your investments grow tax-deferred, and you pay taxes when you withdraw. A Roth self-directed IRA means you pay taxes upfront, but your future gains, including rent and profits, are 100% tax-free. Second, diversification. You're not tied to Wall Street swings. Third, leverage. You can use non-recourse loans to buy larger properties and amplify returns. Finally, passive wealth building. Your rental income compounds inside the IRA without annual tax drag. If you are considering this strategy, there are rules you must follow. There are important IRS rules. 1. No disqualified persons can live in, work on, or benefit from the property. That includes you, your spouse, parents, kids, and certain business partners. 2. All income and expenses must flow through the IRA. Rent checks go to your IRA custodian, and repairs are paid from the IRA. 3. If you borrow money, it must be a non-recourse loan. 4. Using debt may trigger something called UBIT, or unrelated business income tax. Break these rules and you could face taxes and penalties on the entire account. If you want to explore this strategy further, here are the steps to consider. Step 1. Open a self-directed IRA with a custodian that supports real estate. Step 2. Fund the account either by transferring from another IRA or rolling over from a 401k. Step 3. Find an eligible property. No personal use is allowed. Step 4. Work with your custodian to handle titling and closing. Step 5. Manage the property through the IRA with all income and expenses going in and out of the account. If you want to see how this strategy applies to an example deal, here is an example. Let's say your Roth IRA buys a $150,000 rental property. You use $100,000 in cash from the IRA and a $50,000 non-recourse loan. The property brings in $18,000 in rent each year. Expenses total $5,000. That's $13,000 in net income, completely tax-free inside your Roth IRA. Over 10 years with appreciation and reinvested income, the growth can be substantial, all without owing a penny in taxes. Let's run through the pros and cons. First, the pros: tax-free or tax-deferred growth, diversification beyond the stock market, potential for leverage, and hands-off income. Cons: no personal use of the property, less liquidity compared to stocks, custodian fees, and strict IRS compliance rules. Here are some best practices to be aware of. Work with a custodian experienced in real estate transactions. Hire a property manager to avoid prohibited transactions. Keep extra cash in the IRA for expenses. Understand UBIT before using leverage. And think long-term. SDIRAs are best for patient investors. Here is the way to get started. First, choose a reputable custodian. Second, decide whether a Roth or traditional account fits your goals. Third, start small. Buy a single property, follow the rules, and grow from there. With the right approach, you can build a portfolio that pays you for life, tax-free. If you found this guide helpful, consider subscribing for more financial freedom strategies. Drop a comment with your questions about self-directed IRAs, and I'll cover them in future episodes. Until next time, keep learning, keep investing, and keep building your wealth.